Welcome, everybody, and welcome to the session on ESG and venture capital. So ESG investing is a major trend throughout different asset classes. Over $100 trillion have already been committed among investors to ESG as part of the investment process. Unfortunately, venture capital is the one asset class that's really lagged behind. Based on recent surveys, only about 10% of venture capital funds have any sort of thought about impact or ESG in their investment process or active management. So today I have with me four panelists that are really at the forefront of advancing ESG inside venture capital, that are here to share what they've learned, what some of the challenges they faced, and what they think the industry can do to move forward. So our first panelist will be Monica Varman, who is a partner at G2 Venture Partners, where she invests at venture and growth stages in sustainable technologies, digitalizing traditional industrials. Tracy Barba is head of ESG and global stakeholder engagement for 500 Global, where she partners with investors, entrepreneurs, and policymakers to integrate and align resources to promote a more inclusive and sustainable economy. Lisa Calhoun is a founding general partner at Valor Ventures and a Kaufman Fellow. Valor Ventures is a seed stage venture capital fund headquartered in Atlanta. And Victoria Grace is a founder at Kale Capital, a multi-stage fund with an impact investing lens. So to begin our conversation today, I'd like to ask each of our panelists to explain what ESG means at your fund. In particular, there's two aspects of ESG. One is impact, or how do we create positive outcomes for stakeholders and for society and for the environment. And the other side of ESG is how do we manage risk and governance challenges? So how do you think about potential harms that could happen inside your portfolio companies, and how do you actively work with them to prevent those harms and to set up the governance structures that need to be in place inside ventures? So I'll turn it over to whoever would like to answer first.
Susan, thanks so much for kicking us off. I have to say, venture capital should lead the conversation around ESG, SRI, and SDGs. And the fact that we don't is an issue, and I'm glad we're here today to discuss it. Valor's purpose is, of course, premium venture capital returns, but our inclusion premium investing philosophy helps us invest free of bias. For us, that process, to your point about process, starts with sourcing. Because of our sourcing processes, our portfolio looks like America. And about 60% of our current portfolio is led by women, founders of color, and/or LGBTQIA. This serves our very aggressive financial performance goals, but we also believe it serves goals around ideals that matter to a lot of limited partners today. And I'll just give one example. I want to keep the conversation flowing with this incredible group, but we're all aware that wealth inequality is growing in the United States. The number one way today wealth is created is through startups, 55% of net new wealth this last year. And that's a problem if our wealthy don't look like America. And I think it's venture capital's opportunity to solve.
Thank you. And I'm wondering, for all of you, as you began setting up your ESG processes inside your funds, what was the biggest challenge that you faced and how were you able to overcome it? Was it in the fundraising stage, like explaining to potential LPs what your approach was? Was it coming up with the policies? Was it, supporting your ventures as board members, training your investment committee, investment teams? What was that biggest challenge and how did you overcome it?
It was probably firm. So I can say this as the founder of Valor. I founded the firm in 2015 around inclusion. People weren't really talking about inclusion then. By 2016, as we were raising our first fund, I was a solo GP in Fund 1. And so talking about inclusion and being just a female and being a solo partner, there were how was I going to build out a firm that was really representative? Over the last few years, we've diversified our general partnership across the spectrum of race and gender. So our investment committee now also looks like America and brings a lot of diverse experiences to the table. But that was hard. And I'm telling you, it really was a challenge to bring that culture together in my firm over the last few years. Really proud of it. But that's been more challenging than diversifying our recruiting pathways for our founders, more challenging than diversifying our boards, which we have also done, more challenging than creating reporting schemas, which we have done. But I'm really proud to say we're at a place where we can grow from here. Tracy, to follow up on that point really quickly, I'm a huge admirer of your work, and you have inherited quite an oeuvre there, as well as 100 new investments a year. At Valor, over the last 6 years or so, we've come to the firm-wide belief, that it's never comfortable to diversify, and it is always too late. So it's interesting, but in the way we coach startups, we have shifted from a softer coach in the beginning in years 2016, 2017, 2018 to a firmer, more lead seed coach that will say, your founding team, does have this missing hole. Let's recruit someone with fantastic out of this world experience, but also someone who brings a different perspective to you. And the reason we've become stronger and stronger in that is because we see the performance of inclusive perspectives. It's not just because it's the right thing to do. It's because the target population that we're serving these days is truly diverse. And that is the future. That is the customer today. And so we want our startups to be able to compete. And we think it's a clear risk for us to mitigate as their lead seed investor. Just wanted to add that because it's been something that we shifted on, and we got much firmer.
Following up to that, we have a question from the audience. What tools or platforms are you using to capture your ESG metrics from your portfolios, if you're using any tools at all? What's been sort of right-sized to the venture industry among those tools, do you think?
We use custom Salesforce. We started off with Google Forms in 2016, 2017. We moved our entire platform to Salesforce. And that way we're able to email our portfolio founders, their executive teams in segments, and they're able to give us 1, 2, 3 click answers. So it's super lightweight for them. And of course, that information is reflected back real time for our team. It's good for our team to know the status of our various companies across the hundreds of portfolio employees that we have. And then once a year, we do kind of a report for our investors, our annual impact report that really helps them see the graphs, the charts, and the growth. But Salesforce is the tool that we use.
I'm thinking back to what we said at the beginning of why venture capital as an industry is so far behind, why it's only around 10% versus 70, 80+% in most other asset classes. What do you think the role is of LPs in this problem, or what role could LPs play to help accelerate adoption and standardization and best practice of ESG across the venture ecosystem?
I think LPs have a tremendous opportunity to change the world while doing very well for themselves and their strategies by backing diverse managers. One of the things we've seen as a truism across hundreds of companies and hundreds of employees is that people do tend to know other people like them. That makes sense. It starts with your family. And so if you're able to back diverse managers and a spectrum of managers, then you're really going to see typically better performance, closer relationships, and the diversity you're looking for. Plus, hit on some really strong social impact metrics that you might be looking for depending on your strategy. Like for us, sustainable development goals, we really hit hard on 5 of them, are really important to us. But I believe it's the diversity of the manager set that is like the next level of the story that needs to unlock. And LPs as partners and visionaries in this are crucial.